Okay, so continuation of chapter 2 for the subject church financial management. This is the third part already for chapter 2. So, church accounting definitions. These are the items that you would find on the financial reports or financial statements. Okay, so first we have the assets. It's a terminology which refers to the properties owned by the church. Okay, so examples of assets. So we have cash. Okay, it's the most common and of course essential in the operations of a church or any organization, really. Okay, so cash, and then you have investment securities. Sometimes if the organization has excess cash and they know that they might not use the cash for a while, let's say 3 months, 6 months, or 1 year. So they might put the cash into investment securities. Okay, and then from that, they can earn a certain amount of interest, even if it's just a small amount. It's still, additional revenue. Okay, and then we have property and equipment. Um, Property and equipment, this would pertain to land, building, what else? Vehicles, transport equipment, office equipment, um, furniture and fixture of the organization or the church. Okay. The difference is that property and equipment, they are normally long term. They can be used by the organization for more than 1 year. Okay, so that's why they are called property and equipment. Another term for them is fixed assets, and they are classified as non-current assets. Okay, non-current because they can be used beyond the current year. Okay, so fixed assets, PPE or property, plant, and equipment, non-current assets. Okay, so it pertains to that. Land, building, vehicles, furniture and fixtures, office equipment. Okay, so that. And then other types of assets would be accounts receivable. Example of accounts receivable, if let's say Bible school tuition from the students, the trimester is already over, but some students haven't paid their tuition yet. So the church would have a receivable from the students, or the Bible school would have receivables from the students. Okay, or if the church lent money to certain people or organization, then they would have a right to demand payment, okay, or to receive the money back. Okay, so that's another form of receivable. And then we have inventories. So for churches, normally it's just office supplies, so that would be their only inventory. But for others which are operating bookstore, so the books for sale will be considered as inventory. And then if they are also providing food service, so any, what do you call it, food item that they have in the canteen or in the cafeteria would be considered as inventory items. Okay, so inventory items could either be for sale or for consumption or for use in the operations. Okay, next we have loans receivable. So if the church loaned money to an individual or another organization or another church, so they have a right to demand payment if that is the agreement. Okay, of course it's a different case if what was given is a donation. Okay, if it's a donation, then of course you're not expecting to be paid back. Okay, but if it's a loan with the obligation to pay back, so the church, if they lent money, then they can recognize loan receivable. And then lastly, we have prepaid expense. So this is like advance payment. An example of this would be, for example, when you are renting a building or a room, you pay, yung tinatawag nila na 1 month advance, 1 month deposit, Okay, so you're not yet using the building or the room, but before you do, you have to pay first, okay, for the eventual usage of the property. So that's advance payment. So considered as prepaid expense, prepaid. You paid it first before using. Okay, the second terminology is liabilities, another classification. So liabilities would pertain to obligations or borrowings or loans wherein the church has an obligation to pay the other party. Okay? So we call that liabilities. Okay? Sa Tagalog, utang. Okay? Examples of liabilities. So we have accounts payable, amounts due to vendors. So for example, the church bought 100 shares, okay? But instead of paying for the whole amount, they simply paid a down payment, 50%, and the remaining 50% would be paid in installment in the coming months. So the remaining, you know, the remaining payment to be made in the future months would be recognized as accounts payable, okay? Amounts due to vendor. And when it's paid, then the amount would be deducted from the accounts payable, okay? Accrued expenses, expenses that have been incurred but not invoiced by a vendor. So for example, payroll. Normally payroll, the workers would work first. So let's say January 1 to 15. And then for that period of work, they would be paid on, let's say, the 20th. Okay, because the organization would need time to compute their salaries and wages and the deductions, right? So it's an accrued expense, okay? The workers already rendered the service before they were paid by the church, okay? Another example, interest that has accumulated with respect to outstanding debt. Normally, when we borrow money, of course, there is interest, and normally it's paid monthly. Okay, so the interest already accumulated, and then at the end of the month, we have to pay for the accrued interest. Okay, another one, bills, what do you call it? Utilities, right? Usage of water and electricity. Okay, we already used the water and the electricity before we receive the statement of account from the service provider. So essentially, that's already an accrued expense. Okay, we already used the service and we are now obligated to pay for the bill. Okay, so that's an obligation, that's a liability. Okay, so we essentially have an obligation to pay. All right, and the next, debt payable, referred to as note payable if it's evidenced by a promissory note. So if you borrow money, or if the church borrowed money and there is a document, note, promissory note, so you can classify it as note payable. Mortgage payable if you offered something as collateral. So for example, you borrowed money to build a building and you use the building itself as collateral in case you are unable to pay the loan back, then the lender or the bank would, become the owner of the building. Okay, so that's mortgage payable. Loan payable, normally this would be the term to be used if you borrowed from a financial institution, could be secured or unsecured with a collateral. So you can use loan payable. Okay. And then for the most part, these types of loans, debt payable, normally classified as non-current liabilities. Non-current because the payment extends over a period of time or over a number of years, not just for 1 year. Okay. Current liability if it's to be settled within the year or it's immediately demandable by the other party. Okay. It's considered as non-current liability if the payment is stretched over a period of time more than 1 year. Okay. Another type of liability, unearned revenue. Example is tuition money. So in the case of BBBC, the trimester started February up to May. Okay, so if a student pays the tuition in full on February, so the school would recognize an earned revenue. Okay, and as the school delivers the education, the lessons, then they would, slowly recognize the revenue. Okay, and then at the end of the trimester, um, the lessons have been delivered, so the revenue would now be recognized as income of the school and no longer an obligation. Okay, because the obligation to render the service has already been fulfilled. Okay, but at the beginning of the trimester, if a student pays in full, that is recorded as an earned revenue. The service is yet to be rendered, right? And then next we have net assets, difference of assets and liabilities. So you have your assets minus liabilities, net assets. Okay. For businesses, for-profit organizations, they call it equity. Essentially, it represents the portion of the business which is owned by the owner or contributed by the owner in the form of investments. But for non-profit organizations like churches, so instead of calling it equity, the better term being used is net assets, okay, or contributions, okay, because again the difference is that for churches, we receive contributions without promising to give products or services. Okay, that's the case in businesses, but not in nonprofit organizations. So net assets, we have two classifications or two categories. Net assets with donor restrictions, and then the next one is net assets without donor restrictions. So unrestricted and restricted. So for the donation without restrictions, essentially the church management is free to use this for any purpose. They can use it for operations, they can use it for the building, for the Bible school, for the vehicle, or for any other purpose, as long as it's related to church activities. Okay. But for the net assets with donor restriction, so the giver, the donor, specifically stated to which purpose the donation would be used. Okay, so under this, there are two types: permanently restricted and then temporarily restricted. For permanent restrictions, the donation cannot be used by the church, but they can put it in investments, and then the earnings from that investments can be used for whatever purpose. Okay, so essentially the main fund is restricted, but the earnings from that can be used for whatever purpose. Okay, permanent. That's the only example I could give because it satisfies the definition of permanent. Okay. For temporary, let's say temporary restrictions can be used by the church, but for the purpose the donor specified. Okay, for example, for building. So while the church is not yet beginning their building project, so the fund is in the care of the church management. So it will be shown there as temporarily restricted fund, right? But if the church would, begin the building project already, they would be using the donation. So in that case, if it's already used, it would be, transferred to the asset account because it's already going to be a building or, construction in progress. So it would no longer be shown on, the net assets if it's already used. Okay. There's going to be a transfer from temporarily restricted fund to an asset. Okay. And then another, let's say, a specific purpose. Let's say the donor said, I want my donation to be used for the missions. I want it to be used for the Bible school. If any student is in need of, financial assistance, then use it for that. Okay, so restrictions. But once it's used, then it would be off the net asset section. Okay. All right, so it's been 15 minutes again. I'm going to pause here and continue a bit later.